Taxes are the largest expense that most people will incur in their life. But what if you did not have to pay any taxes at all? And no, I'm not talking about cheating, lying, stealing, or committing tax evasion, which could put you behind bars with hefty tax penalties. No, I am talking about using what is literally inside of the tax law to pay no taxes, just like Jeff Bezos, Elon Musk, Warren Buffett, and other billionaires.
He didn't pay any federal income tax. So
that makes
if
me
he's
smart.
paid
There are over 70,000 pages in the tax code, and inside of these pages lie the answer to how regular people just like you and me can legally avoid paying any taxes like the ultra wealthy. And today I am going to give you the most simplistic, easiest to understand explanation of how you can accomplish this in a few simple steps. My name is Sherman the CPA, and I do this tax thing for real. I tax plan every single day for high income earners over at mycpacoach.com. I share my real world experience here on YouTube, and if you want more in-depth explanations on how to reduce your taxes, go ahead and subscribe to our channel. With that said, let's go ahead and jump into it. All right, so income tax is the main tax we are trying to avoid here. And there are all types of income taxes. There is federal income tax, state income tax, corporate income tax, self-employment tax, Social Security and Medicare tax, and so on. Now, all of these taxes have one thing in common: your income. And when it comes to tax, what we are really concerned about is your taxable income. Your taxable income is your income according to the tax law, which may in fact be much lower than your actual income. This is why we hear stories about extremely wealthy people paying absolutely no taxes. They are likely paying no taxes because they show very little taxable income to pay taxes on. It's really that simple. But let's talk about how exactly you accomplish this. Let's talk about some simple ways you can reduce your taxable income. Number one, deductions. So the tax code allows you to reduce your taxable income with something called tax deductions. A tax deduction is a dollar for dollar reduction in your taxable income. So hypothetically, if you earned $100,000 in income and you found $100,000 in tax deductions, you would have zero taxable income and pay zero in taxes. Now, you may be wondering, is this really possible? Yes, I have clients with millions of dollars in income who show a loss on their tax return because they take advantage of tax deductions. And these are not mysterious tax deductions. These deductions reflect money they have invested, spent, or deferred from their taxable income. And I want you to remember those three words: invest, spend, or defer. You can reduce your taxes by carefully choosing how you invest your money, spend your money, or defer your income. Now, unfortunately, 90% of people get this wrong and pay way more in taxes than they actually have to. They just take the standard deduction when they file their tax returns, which is only about $14,000 as of 2023. But you can deduct way more than this if you are savvy and still take the standard deduction. So let's talk about the various ways you can invest, spend, or defer your income to reduce your taxes down to zero. Number two, investments. So as crazy as it sounds, you can receive a tax deduction for investing if, and only if, you invest the way the government wants you to invest. So think about it this way. Put yourself in the government's shoes. If you ran the country, what do you think would be important for your citizens? First and foremost, they are going to need a place to live. So who is going to build the housing? The government says, well, maybe we'll give a tax deduction for investors who invest in real estate. Well, how are people going to get oil and gas for their cars and their houses? Well, the government says, well, we'll give people a tax deduction for investing into oil and gas companies. Oh, well, wait a minute. People need jobs. They can't provide for themselves without jobs, right? Well, who are going to create the jobs? Well, the government says, well, we'll give business owners a tax break for starting and growing businesses, which in turn creates jobs. And the list goes on and on from there. The government needs investors, so they use the tax law to incentivize people to do what they believe needs to be done. A lot of people think that they have to cheat to save on taxes, and that's just not true. All you have to do is get on the right side of the tax law and work with the government and not against it. And at the same time, you can build a fortune of wealth while paying little to no taxes at the same time. You can build your own business, real estate portfolio, stock portfolio, and so on to unlock massive tax deductions to reduce your taxes. So let's talk a little bit more about what that looks like in practice. Number 3, deduct almost anything you pay for. Section 162 of the tax code allows you to deduct all ordinary and necessary expenses incurred in carrying on any trade or business. It's literally in the tax law. You can deduct things you already pay for if it is for a trade or business. And just like that, you can write off your cars, meals, travel, home expenses, and other expenses you already incur if it has a business purpose. Not to mention that you can deduct expenses that can grow your business, like advertising campaigns, building more product lines, hiring more staff, or hiring the best tax CPA that can help you reduce your taxes. But all you have to do is operate a trade or business, or in other words, earn non-W2 income. But even if you do earn W2 income, you can still take advantage of some of the other items in this video. So let's talk about more things here. Number 4, depreciate your income away. A lot of high income earners buy real estate every single year to reduce their taxes every single year. And that is because of depreciation. Depreciation is a non-cash expense that you can claim on your tax return as a deduction. Or in other words, it's a deduction that costs you no money out of your pocket at all. And to add to that, savvy real estate investors who understand the tax law accelerate this expense to where it wipes out virtually all of their income. This is how billionaires like Donald Trump reduce their taxes. So check this, you can buy real estate, which typically appreciates and generates positive cash flow, right? But then on paper, you can show a tax loss because the tax law allows you to depreciate the value of the property, even though it's an appreciating asset. And then on top of that, you can accelerate the rate of depreciation you take, which could effectively wipe out all of your income. By the way, if you want to learn more about this, then subscribe, because I have a full playlist that explains everything I just said in detail. But also keep in mind that depreciation does not only apply to real estate. It applies to any asset you buy for your business or trade. Whether that is equipment, vehicles, office space, or other assets, you can use the depreciation deduction as long as it is being used for a trade or business. Number 5, defer your income to the future. If you cannot deduct your taxable income down to zero, the next logical thing you can do is defer it. You can push the income off of your tax return into the future where you can pay tax on it if and when you need it. So by simply moving money from your bank account into another tax deferred account, you can receive an immediate dollar for dollar tax deduction. Most savvy taxpayers already do this with an IRA or traditional 401k that may be offered by their employer. But to be honest, that is just scratching the surface of what you can do if you operate a trade or business. There are retirement plans for business owners like SEP IRAs or solo 401ks, for example, which allows you to contribute and deduct 3 times more than traditional retirement plans. And then there are additional plans like cash balance plans, for example, which could allow you to contribute anywhere from $100,000 to $300,000 to your retirement and get a tax deduction for it. One of the benefits of being self-employed is that, well, number 1, you get more tax benefits by default. But number 2, you can design benefit plans that primarily benefit you as the employer. Because when you own a business, you are self-employed, you get to take advantage of tax benefits for both employees and employers. Now, I have more videos on our channel about this, so make sure you subscribe if you want to learn a little bit more. Number 6, use charities as a tax shelter. A lot of high-income earners use charities and nonprofits as tax shelters. You can literally set money to the side today, receive a big charity tax deduction, and then you can control how that money is donated over several years, if not decades. For example, take a look at the Bill and Melinda Gates Foundation. They have both a charitable foundation and a charitable trust, which are both tax exempt. This means that they likely get a tax deduction for donating money to charities that they in turn control. Then they can disperse those funds when and however they prefer. The good news for ordinary people is that while you can set up your own charitable foundation, you don't necessarily have to if charitable tax deductions are the goal. There are several options available today, such as donor advised funds, for example, which basically works like a charitable savings account, if you will. For example, if you donate $10,000 each year and think you will continue to do so for the next 5 years, well, you could contribute $50,000 to a donor advised fund and get a $50,000 write-off in this tax year. And then you could use that account to donate the same $10,000 that you were going to do anyway. And that's just a simple example, but there are a lot of different ways you can move money to charities to reduce your taxable income. And I also have videos on this on our channel as well, so be sure to subscribe if you want to learn more about any of these strategies. By the way, if you want to get off YouTube and put more money in your pockets as soon as possible, then consider applying to work directly with me over at mycpacoach.com. As always, thank you for watching, and I look forward to seeing you in the next episode.